What's going on, everybody? Cameron Lombardi back here with another stock market investing video. Today, I just wanted to make a quick video for you guys and show you the advantages and disadvantages of the wheel strategy, selling covered calls, and selling cash secured puts. Before we get too deep into it, guys, if you do like this video, hit that thumbs up button right below. It really does help this video reach more and more people, and it helps the channel grow. Also, if you are enjoying these videos, hit that subscribe button and continue to follow along. All right, so the stock market just opened here. It's 9:35. It's been open for about 5 minutes, so you guys are going to see a lot of movement here in the portfolio. But overall, since the last video, we are up a good bit. As you can see, all time now, we're sitting up almost 22.5%. So the play that we have going on with ARKG is going pretty well. As you can see here, it hasn't moved much. We bought the shares at 94.79, and it's sitting at 94.91 about a week and a half later. So this is one advantage of selling covered calls, is even though the stock hasn't moved much, we're only up $11 or so, as you can see. We sold a covered call on it, and you can see we're up $220 from that call, as well as buying a put on it just in case to cover our downside. But overall, we're up $220 on the options here. And if we wouldn't have sold an option, we'd just be sitting up about $27. So that's one advantage of selling a covered call. Yes, over time, stocks do tend to go up and up and up. So if you don't want to get rid of your shares, you may want to sell a covered call more out of the money. Or if you don't want to, you don't have to do it at all. But this is just one advantage of, if a stock moves sideways for the week, as you can kind of see that ARKG has been doing, you're going to make money off of the stock by selling that call on it, even if the stock doesn't move that much. And that is how I kind of look at it, as just generating passive income rather than just holding on to a stock for the long term and waiting, each week for it to go up, because it's not going to do that every week. There's going to be times where it moves sideways or moves down. And this is how you can just collect a weekly or bi-weekly rent on these stocks that you own. And that's my goal here, is to just generate that passive income. Now, one play I would have benefited from not selling a covered call is that Peloton play I had a couple weeks ago. The stock has absolutely rocketed since then. If you guys remember, I bought the shares around 106.90, and now the stock's pushing 130. So, if I would have held on to those shares, I'd be up about $2,400 in a few weeks here, which would have been obviously a great gain. But, this is just one of those circumstances where the stock did go up a lot, and my shares were taken away, and I think I made around, $400 for the week on this play. But I could have made a lot more if I held on to it for a couple weeks. But again, that's not really my goal. That's not really my intention with this strategy. My intention is to bring in monthly and weekly income into my portfolio. And that's kind of what we've been doing here. We've been doing really well the last couple weeks. So as you can see, the portfolio here is pretty consistently up over the last week, month, 3 months since we've been doing this. It's going really, really well. You can see that pretty strong uptrend here in the last couple of months that we've really been getting aggressive with this method. But that's just a couple of the advantages and disadvantages, guys. There's going to be weeks where stocks go way up and you could have made a lot more. And there's going to be weeks where the stock kind of goes sideways and you made more than what you would have made than just holding on to the stock. And you never should really look at it as a what if. Like, what if I would have held on to that stock? What if I would have not sold a covered call? You just got to go into every play being happy with the money that you're going to make and the percentage that you're going to make, with the long-term goal in mind. If you're hitting around 1% every week over the long term, you're going to do really, really well. That's a 10-year track to $1 million. So just stay focused on the long-term goals and hit that week-to-week percentage. Don't worry about how much money you could have made. Don't get down on yourself or get discouraged. And that is the best way to go about it. But I just wanted to come on and make a quick video for you guys and kind of give you that information and just show you how we're doing here on the plays. So this ARKG play will end on Friday. As you can see, we still have another $140 to make on this covered call. So we're going to wait that out and see how it goes, and I will keep you guys updated. Thank you guys so much for watching this video. If you enjoyed it, again, hit that thumbs up button, subscribe to the channel, leave any comments or questions in the comment section below, and I'd be happy to help you guys out. Hope everybody has a great day and a great rest of the week. Take care.